Hello students, today we are going to discuss about the topic set off and carry forward. This topic is basically from the income tax subject, and in this topic we are going to study about various heads like introduction of the topic, inter-source adjustments, inter-head adjustments of losses, carry forward of losses, treatment of loss under head income from house property, carry forward and set off of business loss other than speculation loss, carry forward and set off loss of owning and maintaining racehorses, demergers, partnerships, banking company, and also about the accumulated loss and unobserved depreciation. So, moving further, let's introduce this topic. For computation of gross total income, income from various sources is computed under the live heads of income. If all the sources and heads are having positive income, that is profit, then the same can simply be added to compute gross total income. However, in certain cases or certain heads have negative income or loss, then such loss needs to be adjusted with income of another source or head. Set off means adjustment of loss from one source or one head against income from another source or another head. Basically, if an assessee has negative income or loss in any financial year, then such loss can be set off or adjust from one source or one head against income from another source or another head. If a negative income is not fully set off in the current year, then the unobserved loss shall be carried forward to subsequent years subject to certain restrictions and conditions. Now, what is the process of set off and carry forward? The process of set off losses and their carry forward may be covered in the following steps. Step 1, inter-source adjustment under the head of income means when the net result of any source of income is loss, it can be set off against income from any other source under the same head. Section 70 deals with the set off of loss from one source against income from another source under the same head of income. There are some exceptions to this case of inter-source adjustment, like long-term capital loss can be set off only against long-term capital gain. However, short-term capital loss can be set off against short-term as well as long-term capital gain. Second exemption or exception, loss of a speculation business can be set off only against the profits of a speculation business under the head profit and gains of business or profession. However, loss from a non-speculative business can also be set off against income from speculation business. Third exception, loss of a specified business covered under section 35AD can be set off only against the profits or other specified business. However, loss from a non-specified business can be set off against income from specified business. Fourth exception of inter-source adjustment, loss incurred in activity of owning and maintaining race horses can be set off against income from such activity only. Means such activity cannot set off its loss from another activity. Another exception, loss from a source, income of which is exempt under section 10 cannot be set off against any income. Next exception, no loss can be set off against winning from lotteries, crossword puzzles, races, card games, gambling, or betting. Therefore, we can set off the inter-source adjustments under the same head of income. Now, let's talk about step 2, inter-head adjustment in the same assessment year. Step 2 is applied only if a loss cannot be set off under step 1, where in respect of any assessment year, the net result of any head of income is a loss. The same can be set off against the income under any other heads for the same assessment year. For example, if there is a loss from business and profession, then it can be adjusted from itself. There are some exceptions to this interhead adjustment. First exception, capital gains. Loss under the head capital gains cannot be set off against income under any other head. However, loss under any other head like business loss shall be allowed to be set off against income under the head capital gains. Second exception, loss of a speculation business. Third exception, loss of a specified business covered under section 35AD. Fourth exception, loss from activity of owning and maintaining resources. Fifth exception, loss under the head income from house property, etc. Now, talking about step 3 of the process of set off and carry forward of losses. Carry forward of loss, step 3 is applied only if loss cannot be set off under step 1 and 2. So, in a nutshell, step 1 is the process in which inter-source adjustment under the same head of income made. Step 2, inter-head adjustment in the same assessment year. This step applied only if a loss cannot be set off under step 1. Step 3, carry forward of loss, applied only if a loss cannot be set off under step 1 and step 2. Now, let's talk about unobserved depreciation. While dealing with unabsorbed depreciation, one should keep in mind the following points. Step 1, depreciation allowance of the previous year is first deductible from the income chargeable under the head profit and gains of business or profession. Step 2, if depreciation allowance is not fully deductible under the head profit gains of business or profession because of absence or inadequacy of profit, it is deductible from income chargeable under the heads of income from the same assessment year. Step 3, if depreciation allowance is still unabsorbed, it can be carried forward in the subsequent assessment years by the same assessee. Moving further, inter-source set off, section 70. Loss arising from one source of income under a head can be set off against income arising from any other source under the same head except in the following cases. Cases, loss set off allowed against losses. Long-term capital loss, long-term capital gain, speculation business loss, speculation business gain, loss from business of evening and maintaining racehorse, loss from lottery and games, gambling, etc. Income from lottery, games, gambling, etc. It means this chart shows whether long-term capital gain or long-term capital loss both are adjusted within the source. Same speculation loss will be adjusted with the speculation gain. Loss from business of maintaining racehorse is set off against income from business of owning and maintaining racehorse. Loss from lottery, card games, gambling, etc. is only set off from income from lottery, card games, gambling, etc. Now, inter-head set off, section 71. Loss arising under the head of income can be set off against income under any other head except in the following cases. Loss arising under the head capital gain cannot be set off from income under any other head. Losses under the head profit and gains of business and profession cannot be set off against income from the head salaries. Now, provisions related to carry forward and set off losses. In this chart, you will see the first column is about section, second column loss to be carried forward, and in third column income against which the loss can be set off, and in fourth column number of years for which it can be carried forward. So let's study one by one about the losses to be carried forward. First, loss from house property. Loss from house property can be set off against income from house property only. It is allowed to carry forward for 8 years from the end of the relevant assessment year. Second loss, losses under head, profit and gains of business or profession, except speculation business loss, is can be set off from profit of any business profession including speculation business profits also. Number of years which it can be carried forward is 8 years. Next, losses in speculation business. Income from speculation business means losses can be set off only from income from speculation business. 4 years from the end of the relevant assessment year is the time frame to carry forward the number of years. Losses under the head capital gains can be set off under head capital gains. 8 for 8 years from the end of the relevant assessment year, num- for which it can be carried forward. Next, losses under the head capital gains. Next, loss incurred in activity of owning and maintaining horse race. It can be settled only from income from owning and maintaining race horses. It can be carried forward for 4 years only. Next, carry forward and set off of accumulative loss and unabsorbed depreciation in case of amalgamation.